Hey everyone, it's George from Blockchain DXB podcast, and today is the 20th of July 2026. And so far as the price of Bitcoin and the global cryptocurrency market is concerned, guys, there is not much improvement, but it is also important to note we are recording this episode in the early hours of Dubai, and technically speaking, guys, it is still Sunday in most of the Western countries, and because of that, the numbers are relatively less. And what happened last night, Satoshi, FIFA World Cup kicked off as well, and Spain is the new champion. Now later on towards the end of this month, there is going to be a FOMC announcement as well. So it's going to be really interesting to see what happens over the next few days. But here's the thing, guys. Right now, Operation Epic Fury is still going on, and looks like the war between Iran and US is escalating. And I'm pretty much sure because of that, the prices of Bitcoin and cryptocurrencies will be impacting. Now in today's episode, Satoshi, we have quite a lot of interesting things to cover. The first news, guys, is regarding Bitcoin. And this particular news, Satoshi, is connected to BIP, that is Bitcoin Improvement Proposal. And this proposal, guys, is connected to BIP-110. Now, Satoshi, how would you define Bitcoin Improvement Proposal 110 in one sentence?
George, BIP-110 is a proposal to improve Bitcoin by introducing a way to dynamically manage block size to improve scalability.
Now in today's episode, we'll definitely go ahead and take a deep dive into what BIP-110 is and what I thought in today's episode. We'll go ahead and highlight the benefits of BIP-110 as well as some of the drawbacks, because some of the iconic people like Michael Saylor, they are definitely not happy regarding BIP-110. Now after that, Satoshi, we're also going to be talking about Clarity Act, and according to me, look Satoshi, this could definitely change the future and trajectory of cryptocurrencies in the United States of America, but a lot of the Democrats, they are trying to be massive detractors regarding anything President Donald Trump is doing, and Clarity Act is definitely one of them. So in today's episode, Satoshi, what I thought we'll do is, we'll go ahead and tell our listeners latest update regarding this. Now the third news we're going to be talking about is all the way from Japan. And look, as historically Japan, they've been massive advocates of Bitcoin and cryptocurrencies, but now it looks like there's a really interesting update to Japan. And Japan, guys, they're reclassifying what Bitcoin and cryptocurrencies actually mean. So in today's episode, we'll take a deep dive into this. Now the final news, Satoshi, is all the way from United Kingdom. And here's the thing, guys. The United States of America and United Kingdom, they are working on a joint regulation for stablecoins, tokenization and digital assets. This, according to me, is definitely positive, and it's going to be really interesting to see what the outcome to this is. So it looks like, Satoshi, we have quite a lot of interesting things to cover, isn't it, in today's episode? And like we do in every Blockchain DXB podcast, we will be looking at two news from Dubai, UAE and the Middle East. Do you want to tell our listeners, Satoshi, what are the two news you're going to be discussing later on in today's episode?
Sure, George. We do have a lot to cover today. Regarding those two news pieces from Dubai, one is that Deep Finance Capital has launched as the first AI-native asset management company in the DIFC. The second is that TFSF Ventures has opened a Dubai office at the Iris Bay Tower and is expanding their AI team. We'll be discussing both in detail.
We definitely will, Satoshi. So it looks like we have quite a lot of interesting things to cover, isn't it, in today's episode? But before we do that, a quick word from our sponsors. Hey everyone, this episode is powered by a new sponsor, that is Amana. And they are the region's first and fastest growing regulated all-in-one trading and investing app. So look, guys, whether you're looking into invest in US stocks like Apple or Tesla, or mena giants like ADNOC or Salik, Amana puts the financial markets on your fingertips. It includes gold, foreign exchange, ETFs, futures, commodities, and guess what, guys? They have over 375 cryptocurrencies, and this makes them the biggest crypto selection in the region. Now for the Blockchain DXB listeners, guys, if you want to go and build long-term wealth without thinking about it every day, explore Amana's pre-built auto investment plans, and all you have to do is set your monthly budget, choose your preferred asset category, and let Amana automate the investing for you. Zero fees, zero lockups, 100% customizable. And here's the thing, guys, funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even crypto wallets. No friction and no hassles. And the best part is, guys, let's say if you need support, you would absolutely love Amana for this, because they offer 24/6 human customer service, as well as a personalized sales support, real people, real help, and the customer support is in English as well as in Arabic. And for the Blockchain DXB listener and community, guys, I do have something really exclusive for you. What you can do is register with Amana using the code Blockchain DXB, or you can also use the link that is in the show notes below. And here's the best part, guys. Once you register, fund your account with a minimum of $100 and at least go ahead and make one trade, and then you'll receive a $100 trading bonus credit to your account the following month. But look guys, it's real important to note, the bonus is non-withdrawable. It is there to help you trade and learn. So look guys, if you're looking for a transparent, powerful and easy to use app, that's a Mana for you. So what are you waiting for guys? Download the app now, or you can also visit the website that is amana.app, and don't forget to use the code blockchain DXB. And Amana guys is all markets one app. Next guys, I'm happy to announce that Blockchain DXB is the official media partner with one of the OGs in the cryptocurrency and blockchain event space, and that is Blockchain Futuristic Conference taking place in Florida this year, as well as ETH-Women taking place simultaneously. And trust me guys, this is an event that you don't want to miss, isn't it? Cause for the very first time, North America's most immersive Web3 event is heading to the United States of America, and the Blockchain Futurist Conference and ETH-Women event is actually taking place between the 5th and 6th of November. And the location is absolutely stunning guys. It is taking place at Guitar Hotel at Hard Rock, which is in Hollywood, Florida. That's right guys, palm trees, panels, and the biggest mind in blockchain and cryptocurrency is all in one place. So there will be multi-stage panels, NFT galleries, DeFi showcases, hand-on tech demos, metaverse experiences, even outdoor VIP cabanas and quite a lot more. And the Guitar Hotel at Hard Rock guys is one of the most iconic venues in the country. So look guys, if you're in the Web3 space, cryptocurrency, Bitcoin or even artificial intelligence space, or just want to do some serious networking, this is the place that you got to be. And to all of you Blockchain DXB listeners guys, we have something really interesting for you, cause you can get a 25% off the tickets. So just use the code DXB25, and the link to the event as well as the code is in the show notes below. And as an official media partner, I'll be doing exclusive live coverage, interviews, behind the scenes access, and I will be spotlighting some of the most exciting projects shaping the future of decentralized finance tech. So if you're at the venue guys, definitely come and say hi. Maybe we can catch up for a coffee as well. So listen guys, the code is DXB25, and by using this code you will be eligible for a 25% discount. And the event is taking place between the 5th and 6th of November 2025 at the iconic Guitar Hotel at Hard Rock, that is in Hollywood, Florida. And in the show notes below guys, there's all contact details for Blockchain Futuristic Conference Florida 2025, as well as ETH-Women. And look guys, this is the future of blockchain technology brought into life. So don't just read about it, be there and head to the website that is futuristconference.com and go ahead and use the code DXB25. So see you at the event. Next, Advanced Media. Advanced Media guys is the largest distributor of professional video, photo, broadcast and cinematic equipment and accessories in the Middle East and MENA region. With over 2 decades of experience, Advanced Media is now the largest distributor in the Middle East, representing more than 100 recognizable brands, including brands such as Zeiss, DJI, Hasselblad, Red and Rode. As a matter of fact guys, the very mic that I'm recording is being sponsored by Advanced Media as well, and Advanced Media has showrooms in Saudi Arabia and services as well. Looks like they're definitely taking the Middle East by storm. And here's the beautiful thing guys, they're taking corporate social responsibility very seriously, and they're focusing on 3 P's, that is people, planet and prosperity. Now listen guys, if you do want to find out more information regarding the statement of corporate social responsibility, check out the website that is www.amt.tv. And here's the beautiful thing guys, they also want to be a leader and set an example and reputation as a pioneer and member of the community. And in doing so guys, they also have an AMT scholarship with SAE Institute in Dubai, UAE. So definitely check it out. And also guys, Advanced Media is committed to persistently developing, organizing and hosting training workshops, seminars and community events that educate, inform and familiarize consumers with new equipment and the latest technological advances. So listen guys, do one thing. If you do want to support this channel, go to the website that is www.amt.tv and follow the social media channels as well. All of the details are in the show notes below. Next, Startup OI is global one tech platform for tech. It offers global high-paying tech jobs with flexibility in working time and location, global free tech events, and tech networks to connect with global like-minded engineers. A brilliant platform to listen to the tech experts in Metaverse and to grab their insights. Now listen, all you have to do is download the app Startup OI. If you're using an Android version, go to Google Store and App Store for iOS devices. Alternatively, you can also click on the show notes below to download Startup OI. Next, guys, listen, if you're into fitness, if you're into adventure, if you want to do something wild but still want to keep your health in check, there is a new podcast in town, a podcast focusing on obstacle course race in the Middle East. The podcast is called the Race Pace Podcast. So check out the Race Pace Podcast across all leading platforms. And the Race Pace Podcast is a peer-to-peer community-driven podcast where they talk all about obstacle course race in the Middle East, from Sandstorm to Spartan Race, from Tough Mudder to Desert Warrior Challenge, and also the Government Gulf Games, and quite a lot more. The podcast has interviews with athletes locally and internationally to get inside scoop on how athletes prepare for obstacle course race. In the podcast, they also talk about interesting stories on why they are motivated to do obstacle course race. And that's not all. They also plan to release 7 NFTs. And these NFTs are no ordinary. These NFTs will represent every emirate in the UAE. And listen guys, these NFTs are going to be absolutely massive. So do one thing, go to Spotify, go to iTunes, go to any leading podcasting platform, check out the Race Pace Podcast across all leading platforms. And finally guys, not your keys, not your crypto. If you have dabbled with cryptocurrencies and now are seriously getting to protect your cryptocurrencies, there is no better way to protect it by using a hardware wallet. And this is where Ledger Wallet kicks in. And Ledger Wallets are hardware cryptocurrency wallets made by Ledger, a company headquartered in Paris, France. And Ledger's hardware wallets are multi-currency wallets that are used to store private keys for cryptocurrencies offline. And Ledger offers 2 hardware wallets, the Ledger Nano and Ledger Nano X wallets. They are world-class experts with extensive crypto security backgrounds. They continuously look for vulnerabilities in Ledger products in a constant effort to improve the level of security. Now, in today's world, securing these digital assets is a critical challenge, and this is where Ledger kicks in. So click the link below to buy your hardware wallet and support this podcast. It is a brilliant way to support this podcast. So what are you waiting for? The link is in the show notes below.
Now guys, since you're taking care of that, let's quickly run to the global cryptocurrency market. Now here's the thing guys, the global cryptocurrency market is at $2.27 trillion, and in comparison to last week, honestly not much is taking place in the world of Bitcoin and cryptocurrencies. But what I'm really liking since the last 24 hours, the cryptocurrency market is around the $70 billion mark. This, to be honest, is definitely great in comparison to the previous weeks and this year, because earlier this year guys, on an average given day, the 24-hour volume used to be around the $50 to $60 billion mark. And particularly on weekends, these numbers were actually going down, but hopefully now momentum is changing. But the momentum regarding decentralized exchange isn't changing at all, and the 24-hour volume of decentralized exchange guys is well below the $5 billion mark. As a matter of fact, it is below the $4.30 billion mark, $4.29 billion to be precise, and the total fees connected for these transactions, Satoshi, is only at $54.45 million, and the total value locked guys this year hasn't crossed the $100 billion mark. Since the last 24 hours, it is down to $75.5 billion, and Satoshi, which I personally keep an eye on, is the decentralized exchange ratio dominance, and since the last 24 hours, this percentage is at 31.58%. Now look Satoshi, so far as institutional investors are concerned, now we do have a matrix that does give us a very strong assessment as to which direction the prices are heading towards, and this is connected to inflows and outflows, and I'm talking about crypto-related ETFs. And since the last trading day, which was on Friday, Satoshi, the crypto ETF saw inflows in the world of Bitcoin and cryptocurrencies, and the ETF inflows is $169 million. So am I right in saying because of inflows, we do have a very strong assessment as to which direction the price of Bitcoin and cryptocurrencies would be heading towards?
You're right, George. The 24-hour volume on decentralized exchanges is low. But the good thing is, as you mentioned, when you look at the ETF inflows, we are seeing positive movement. That could indicate potential positive momentum for the price of Bitcoin and cryptocurrencies in the coming days.
But here's the thing, guys, whatever we're saying is definitely not financial advice. Make sure you go ahead and do your own research. Now what I want you to do next, Satoshi, is I want you to read out the matrix of the top 5 decentralized exchange platform for our listeners, please.
Certainly, George. For our listeners, the top 5 decentralized exchange platforms by 24-hour volume are Uniswap at about $1.41 billion, followed by PancakeSwap at over $666 million, then Pump at over $600 million, Aerodrome at about $233 million, and Native at roughly $126 million.
Well, thank you so much for that. And here's the thing, guys, the volume of decentralized exchange isn't looking that great. And along with that, the volume of stablecoins isn't looking that great either. And unfortunately, guys, the volume of stablecoins, according to me, is absolutely horrendous. And truth be told, this number should be at least 5 times of what it is. Tether USDT's volume is only at $34.89 billion. Along with that, The volume of circular USDC is only at $4.27 billion, and the number third so far as the volume of stablecoins is concerned is FDUSD, and the 24-hour volume is only at $137.06 million. Now for our listener Satoshi, do you want to explain why the volume of stablecoins is important and low volume does not look promising so far as the price of Bitcoin or cryptocurrencies are concerned, isn't it?
Exactly, George. Stablecoin volume is definitely crucial because low volume suggests there's less demand and less transactional activity, as stablecoins are often used as a gateway or for trading. When volume is this low, it could indeed be seen as lacking promise for the prices of Bitcoin and other cryptocurrencies. It reflects lower market participation.
You're absolutely correct, Satoshi. Now, am I right in saying right now, because there's so much of buzz going on regarding artificial intelligence and so far as data centers is concerned, everyone is investing a lot in data centers, isn't it? So because of that, a lot of momentum and investment is being taken away from cryptocurrencies and pushed into the AI industry. What is your assessment, Satoshi, regarding it?
That's a fair assessment, George. The rise of AI and the subsequent investment in data centers and infrastructure is drawing significant capital. It's competing for funds that might otherwise have gone into crypto, especially for investors looking for high-growth opportunities. I'd say that the current hype cycle around AI definitely has an effect on diverting short-term momentum, though the long-term picture might be more complex.
Now, along with artificial intelligence, Satoshi, I do feel a bit of regulatory clarity will also help. And later on today's episode, we'll also go ahead and touch base on Clarity Act. And Clarity Act, according to me, can definitely push the momentum in the world of Bitcoin and cryptocurrencies. Now, before we go ahead and delve into that, Satoshi, what I want you to do is, I want you to read out the market cap, tell our listeners what is going on regarding Bitcoin since the last 24 hours, and also tell our listeners the dominance, and do the same thing for Ethereum as well as Binance BNB Coin for our listeners, please.
Sure, George. Let me go ahead and do that for you. Bitcoin's market cap is at about $1.29 billion, with a 24-hour volume of roughly $15 billion, and its dominance is right around 57.36%. Then for Ethereum, you're looking at a market cap of about $225.68 billion, a volume of about $7 billion, and a dominance of 9.92%. And for Binance, the market cap is approximately $75.95 billion, with an $824.56 million volume, and a market dominance of roughly 4.15%.
Well, thank you so much for that, Satoshi. Now, look, in every Blockchain DXB podcast, we tend to look at one new matrix. Today, what I want you to do is, I want you to tell our listeners what is going on regarding meme coins. So why don't you do one thing, Satoshi? Why don't you read out the matrix for meme coin for our listeners, please?
Sure thing, George. For our listeners, the top meme coins have a market cap of about $26.3 billion, which is a 0.5% change in the last 24 hours. Dogecoin is the largest at $11.21 billion, followed by Shiba Inu at $2.44 billion, then Memcore at $1.61 billion, Pepe at $1.18 billion, and Pump.Fun at $803 million.
Well, thank you so much for that. And here's the thing, guys. Dogecoin's market cap at one point of time was $27 billion. This was when Bitcoin did actually reach a new all-time high. So from $27 billion, now it is down to $11.21 billion. Absolutely crazy world, isn't it? Now let's do one thing, Satoshi. Let's go ahead and tell our listeners what is going on regarding Bitcoin. So what I want you to do is, I want you to tell our listeners the price of Bitcoin, what is going on since the last 24 hours and 7 days. As a matter of fact, do the same thing for Ethereum as well as Binance BNB Coin for our listeners, please.
Right, George. To give you the numbers, Bitcoin is currently at 64,666, seeing a slight drop of about 0.17% over the last 24 hours, but up 1.39% over the last 7 days. Ethereum is sitting at around 1880, with a 0.52% increase since yesterday, and up more than 3.5% this week. Finally, Binance BNB is at 570, almost flat with a 0.02% gain over the last day, but showing a slight dip of 0.64% on the 7-day view.
Well, thank you so much for that, Satoshi. Really appreciate that. And here's the thing, guys, if you look at the fear and greed index, right now it is still at fear and the number associated is 34. And the reason why the market sentiment is still at fear, Satoshi, because there's still escalation going on between Iran and US, isn't it? It's going to be really interesting to see how this drama unfolds. Now let's do one thing, Satoshi. Let's go and talk about a really interesting news. And this is connected to Bitcoin. And we're going to be talking about BIP-110. That is Bitcoin Improvement Proposal 110. Now, am I right in saying, Satoshi, that Bitcoin Improvement Proposal 110 is essentially a proposed temporary soft fork that would actually limit arbitrary non-financial data stored in Bitcoin blockchain, thereby aiming to reduce spam and refocus Bitcoin on monetary transactions?
That's right, George. BIP-110 is proposed as a soft fork that would limit that extra data being stored on the blockchain. The idea is to reduce spam and keep Bitcoin focused on its core purpose of financial transactions, just like you said. We'll have to see how that discussion progresses within the community.
There is a lot of drama going on regarding Bitcoin Improvement Proposal 110. Now, for our listeners, what I'd really urge you to do is go to the website, that is BIP110.org, and you'll get all the information regarding this. But what I want to do next, Satoshi, is I want to go ahead and highlight some of the benefits of BIP110. At the same time, highlight some of the drawbacks or negatives of this particular improvement proposal. Now, let's do one thing, Satoshi. Let's go ahead and tackle the benefits of Bitcoin Improvement Proposal 110. Now, there are 3 points I'd like to touch based on Satoshi. The first one is that Bitcoin Improvement Proposal aims to reduce blockchain spam and arbitrage data storage. And here's the thing, guys. It does this by limiting the file size, and it stops people from hiding big picture files or long text directly into normal Bitcoin transaction. Now, from a technical point of view, Satoshi, it does focus on restores open return, constraints reinforce an 83 baht limit, and also OP return outputs, thereby closing high-capacity data storage methods, isn't it? Now, you can make an argument, Satoshi, that Bitcoin Improvement Proposal 110 also closes storage loopholes, and it fixes trick developers use to fit extra data into parts of transactions that were not meant for payments, and essentially it reduces overall state bloom and storage pressure, thereby making it cheap and easy for everyday users to validate and maintain a full node in it. And because of that, it does actually save computer space, and essentially it means that it does actually keep the blockchain smaller, so everyday users don't need to run super expensive computers to run a Bitcoin node. Now, along with that, Satoshi, am I right in saying that Bitcoin Improvement Proposal also promises to keep Bitcoin focused on payments and sound money?
That's absolutely correct, George. It does discourage non-financial exploits. Invalidation of large data structures makes using Bitcoin as an arbitrary cloud store economically and technically inefficient. Makes storing extra data too annoying. If you can't put big files on Bitcoin easily, people stop trying to use it like a giant hard drive. Protects core protocol scope, prevents software creep in standard clients, aligning developer focus on transaction throughput, privacy, and scaling layer 2 payment networks. Keeps developers focused, helps the coders stay focused on making payments faster and cheaper instead of supporting non-money features. Restores historical standards, reestablishes historical design assumptions where consensus rules actively discourage non-monetary ledger bloat.
And it offloads arbitrary data chunks or block spaces and routinely congested by image or text inscription, particularly during high demand periods, and it stops sudden rushes of image uploads from clogging up the network and driving up transfer fees, and it does prioritize peer payments by ensuring simple monetary transfers, that is peer-to-peer payments and lighting channel closures, and more importantly, because it doesn't get priced out by high fees and non-financial data, and by doing that it saves room for everyday transactions, thereby ensuring regular people sending money or using Lightning Network don't get priced out. And because of that, guys, it does improve mean predictability as well, thereby keeping fee estimation stable for standard wallet users by filtering out erratic batch data transaction, and it does make transaction cost predictable, thereby making it easier for regular wallets to estimate how much fee you need to pay to send money quickly. Now look, Satoshi, these are definitely some of the benefits. Now let's do one thing, Satoshi. Let's go ahead and discuss some of the drawbacks or negative aspects to it. Now, rather than saying so far as BIP110 is concerned, it also restricts non-financial use case built on Bitcoin.
That's correct, George. There are certain drawbacks to it as well. For example, it restricts non-financial use cases built on Bitcoin. It blocks advanced smart contracts. Tight control and script limits temporarily restrict complex smart contract designs, such as BitVM or multi-party covenants. It also blocks complex applications. Strict limits make it harder to build advanced programs like smart contracts or complex security features directly on Bitcoin. It restricts identity and proof protocols. Protocols using Bitcoin as a timestamping layer or decentralized identity register face tight payload limitations. It also limits digital identity systems. Projects using Bitcoin to verify identities or store important digital certificates will struggle to fit their data. There's a risk of breaking Miniscript edge cases. Disabling or limiting opcodes like OP-IF or OP-NOT-IF and Taproot can break niche wallet spending policies. It also can break advanced wallet rules. Some unique custom wallet setups like special rules for sharing or recovering money might stop working.
That is absolutely correct, Satoshi. And along with that, here's the thing, guys. It may also impact protocols using Bitcoin for data inscription. And we're talking about forcing inscription systems like ordinals or BRC20 tokens. And what it might actually do is it might actually chop data into 256 byte chunks across many transactions, thereby drastically increasing the fee cost. And this does make ordinal much more pricier, and essentially does make ordinals much more pricier. And we are talking about Bitcoin NFTs. And what could happen is, because of BIP110, it could chop photos into tiny pieces across dozens of transactions, thereby making them essentially more expensive to create. And as you talked about earlier regarding Taproot Satoshi, it does actually invalidate Taproot and extra exploits, and we're talking about it prohibiting the use of Taproot and X field, and we're talking about shutting down a primary when used for arbitrary data embedding, and essentially cause it blocks secret hiding spots, and essentially cause it closes specific areas hidden in Bitcoin code, like Taproot NX, where creators were stuffing extra data in it, and developers building indexes or encryption tools, guys, must rewrite spending logic or migrate functionality to side chains, and it also forces in developers to rebuild, and tool makers and app builders would have to spend a lot of effort rewriting the code or moving to separate blockchain. Now Maran is saying, Satoshi, apart from that, there is a chance that BIP-110 could increase debate over Bitcoin's future direction as well?
Yes, George. There's a very high possibility it would increase the debate over Bitcoin's future direction. It raises censorship and neutrality concerns. Critics argue that deciding which valid fee-paying transactions are spam sets a slippery precedent for transaction filtering. It triggers arguments. Some people argue that if a transaction pays its fee, the network shouldn't decide if it is spam or real money. It creates chain split risks, with a non-standard 55% signaling threshold for activation. A contested rollout risks splitting the network into competing chains. It risks splitting the network. If half the community wants this update and the other half hates it, it could risk splitting Bitcoin into two different coins. It divides the community, pits monetary purists against developers building secondary utility on Bitcoin, escalating ideological friction rather than technical consensus. It splits the community. It creates arguments between money purists who only want payments and creators who want to build extra tech on top of Bitcoin.
Now, according to me, Satoshi, am I right in saying Bitcoin is the purest form of money? And if you were to agree that Bitcoin is the purest form of money, what is your take regarding BIP-110? Are you in favor of it or are you disagreeing to it?
Whether BIP-110 is desirable depends on one's priorities for Bitcoin. If the purity of the network as a monetary system is paramount, the proposals aim to reduce spam and keep it focused on transactions might be appealing. However, if fostering innovation and developing secondary functionality directly on top of Bitcoin is important, then the restrictions presented by the proposal could be seen as a drawback. It's a fundamental trade-off.
Well, that's not what I asked you, Satoshi. I asked you, if Bitcoin is the purest form of money, if keeping that perspective in mind, what is your take regarding BIP-110?
If you view Bitcoin as primarily the purest form of money, then BIP-110 aligns with that goal by prioritizing monetary transactions and minimizing bloat. From that specific perspective, the proposal could be seen as beneficial as it focuses on reinforcing that core function. It's about whether protecting that original intent is the highest priority. I don't hold personal stances, but that's how it would be interpreted within that viewpoint.
Well, let's do one thing, Satoshi. Let's go ahead and discuss the next news, and this is regarding Clarity Act. Now, before we go ahead and give our listeners latest update regarding Clarity Act, Satoshi, why don't you explain to our listeners what Clarity Act is, and then tell our listeners how does institutions actually benefit because of Clarity Act? How does the Bitcoin and cryptocurrency ecosystem benefit by this? And thirdly, Satoshi, how can average users actually benefit because of Clarity Act? And after that, I'll go ahead and give our listeners some update regarding Clarity Act, okay?
Sure, George. The Clarity Act is a proposed law that would set clear rules for how cryptocurrencies are classified and regulated in the United States. It's meant to provide legal certainty. Institutions benefit because defined regulations make it safer for them to invest and offer crypto services. For the ecosystem, this could mean more stability and growth as more players participate. Average users benefit because they'd have clearer protections and a better understanding of the rules of the game. That's the basic idea.
Now, we do have some really unfortunate update regarding Clarity Act, guys. Now look, Satoshi, Clarity Act remains stuck in the Senate at the moment, but it is important to note it is stuck after clearing the banking committee, but the bill is still waiting for a full Senate floor vote, and lawmakers are racing against August recess deadline, with negotiations focused on resolving final disagreements. Now the key obstacles remain Satoshi with ethic rules and also stablecoin yield provision, which continue to delay a final agreement. Senate staff are working to merge different versions of the bill before seeking enough support for a 60-day vote approval. And scarily enough, guys, if no deal is reached before August, the bill could actually be pushed into a fall amid a busy election year schedule. And as of now, crypto markets are closely watching progress, and approval could actually bring longer-awaited regulatory clarity for digital assets. And when that thing happens, I do think it'll be another win for the Trump administration. Now let's do one thing, Satoshi. Let's go ahead and look at some news all the way from Japan. And Japan, guys, has reclassified cryptocurrencies as financial assets, and they're moving them from a payment-focused framework to an investment framework, and this is under new law taking effect in 2027. Now, the new rule, Satoshi, paves the way for future crypto ETFs, but at the same time, they're introducing stricter regulations for exchanges and issuers, and they're also increasing penalties for unregistered crypto operators. And lawmakers, guys, have also approved a plan to reduce the crypto tax rate from as much as 55% to merely 20%. And the low rate, guys, is expected to begin in 2028. Now, it's important to note, guys, the changes aim to strengthen investor protection, improve transparency, and support the growth of Japan's digital asset market. What do you make of this news, Satoshi? According to me, it is definitely great news, isn't it? And historically, look, Japan has always been a massive advocate of Bitcoin and cryptocurrencies, isn't it?
Well, George, these changes seem like a significant step for Japan. By treating crypto more like traditional assets, they could open the door for things like ETFs, which could bring more institutional investment. The tax reduction is also likely to be welcomed, as it lowers the barrier for entry. Overall, it looks like they're trying to balance regulation with growth.
Now, if there is any area for improvement, Satoshi, what area do you think they can possibly improve upon? Or is there any way do you think artificial intelligence could actually assist them?
For improvement, they might need to focus on the details of the regulatory framework, especially how they handle decentralized finance, which can be tricky. As for AI, it could help with monitoring for fraud or market manipulation, strengthening investor protection, or even helping with compliance for those stricter rules.
Well, thank you so much for your valuable insights, Satoshi. Now let's do one thing. Let's go ahead and discuss some interesting news where United Kingdom, along with the United States of America, are working to strengthen cooperation of digital assets, and this cause includes tokenization, stable coins, as well as cryptocurrency regulations. And the whole idea is that they want to support innovation in cross-border markets, and regulators from both the countries, guys, will be working together to align rules, test blockchain use cases, and also create standards for digital finance. And the United States of America and the United Kingdom, guys, they also want to make cross-border capital raising easier by improving regulations, increasing transparency, and reducing market barriers. And together, they're aiming to strengthen the global financial leadership, and they're doing that to modern financial infrastructure, high-quality standards, and closer regulatory cooperation. Now, what I'd really urge our listeners to do is go to the official UK government website, that is www.gov.co.uk, and they have a list of recommendations, 10 of them to be precise. But can you do one thing, Satoshi? Can you tell our listeners a summary of all the 10 recommendations, please?
All right, George. Here's a quick summary of the 10 recommendations. Recommendation 1. Create a private sector group to test cross-border tokenization. Recommendation 2. Regulators will explore common approaches to tokenized assets like settlement and collateral. Recommendation 3. Publish a joint statement on stablecoins to encourage cross-border development. Recommendation 4. Support innovation by letting stablecoins and digital money coexist. Recommendation 5. Review standards for crypto asset management to ensure they're up to date internationally. Recommendation 6. Explore ways to make cross-border capital raising easier. Recommendation 7. Consider the UK's standards when setting rules for foreign private issuers. Recommendation 8. Collaborate on consolidated tapes for market data. Recommendation 9. Look into longer-term substituted compliance for swap execution. Recommendation 10. Commit to high-quality accounting and auditing standards. That's the gist of it.
Well, thank you so much for that, Satoshi. Really appreciate that. And again, guys, if you do need any information regarding this, I'd really urge you guys to go to the official government website, and the website is www.gov.uk. Now let's do one thing, Satoshi. Let's go and look at 2 news from Dubai, UAE, and the Middle East. And the first news, guys, is regarding the financial capital, and they have officially launched in Dubai as a new asset manager, and it is a first-year native asset management company, DIFC, and the company, guys, uses its own AI across the entire investment process, and it operates from the iconic Emirates Financial Tower in Dubai. And regarding the company was created from Ramsell Investment House Limited, and it serves institutional and professional clients across global markets, and it invests in real estate and property opportunities worldwide, and it focuses on private equity investment opportunities, and commodities are another key investment area for the firm. And the company also invests in special situations and opportunities, and its proprietary investment platform is called as Next, and Next helps find, analyze, and assess investment opportunities, and they are supposed due diligence before investment decisions are made, and it also helps assess and manage investment risk effectively. And Nextcast continuously monitors and tracks investment portfolio performance. And regarding the AI technology, it is developed by DFinance Analytics. And regarding the newscast, DFinance Capital comprises Dubai based with a strong European investment network, and the company operates under a strong governance, compliance, risk, and operational framework. What do you make of this news, Satoshi? I do think this is definitely a great move, isn't it?
That's absolutely great news, George. Deep Finance Capital launching as the first AI native asset manager in the DIFC is a pivotal moment for the region. By integrating AI across the entire investment process, they're setting a new standard for efficiency and data analysis. Their focus on global real estate, private equity, and commodities, all guided by this Next platform, shows a really diverse approach. It's impressive that their proprietary technology is developed in-house as well. Operating from Emirates Financial Towers provides a strong physical presence within that major hub. They seem to be blending regional expertise with a broad European network. Plus, the emphasis on strong governance provides clarity for their clients. It's certainly a significant development for the market.
If you were to give them any advice, Satoshi, what advice you'd like to give them? Because right now, look, there's so many AI companies involved, isn't it? What advice you'd like to give them so that they can have a competitive edge in the market?
For a competitive advantage, they could focus on continuously refining their AI models with new data to maintain performance. Clearly demonstrating their ethical AI practices could also set them apart. Leveraging their strong European network to offer unique investment opportunities not available elsewhere could also be very effective. Additionally, building highly personalized, high-touch relationships with clients might create a strong bond.
Definitely interesting advice, Satoshi. Really appreciate that. Now let's do one thing, Satoshi. Let's go ahead and discuss the second news. And this is from the Emirate of Dubai once again. So why don't you do one thing, Satoshi? Why don't you tell our listeners what this news is all about?
All right, George, let's dive into this news in detail. TFSF Ventures has officially planted its flag in Business Bay, Dubai, expanding its UAE presence beyond Ras Al Khaimah. This new office will be client central for the whole Gulf region. These guys are maestros of AI, building custom intelligent agent infrastructure for businesses across 21 different industries. And here's the kicker. Clients keep full ownership of all the code, systems, and intellectual property. They operate using what they call a ghost architecture. To support this growth, they're bulking up their infrastructure team, paving the way for their upcoming AI payment protocol launch. This patent-pending tech makes AI system transactions secure. They filed 3 U.S. provisional patents covering 47 claims. Every project begins with an intense 19-question operational assessment, figuring out workflows, data, and challenges. TFSF delivers deployment blueprints in 48 hours and working infrastructure within 30 days. This new office gives them better access to UAE, Saudi, and GCC businesses, operating across 4 regulatory jurisdictions worldwide. They're laser-focused on AI infrastructure, payment systems, and building AI-native companies.
Well, this definitely sounds like a massive deal, isn't it? Now look, Satoshi, I'm in the world of blockchain technology, isn't it? Do you want to tell our listeners what role do you think blockchain technology can actually play in this? And how can the company actually benefit by using blockchain technology?
Blockchain can play a major role, especially for that payment protocol they mentioned. It could provide secure, transparent, and irreversible transactions for those AI systems. Plus, for their broader AI infrastructure, blockchain could offer a decentralized way to manage data and ensure code integrity, giving clients more control and enhancing trust. It definitely reinforces their security focus.
Now, Satoshi, look, talking about security, right now the buzzword is sovereign artificial intelligence, isn't it? Do you want to tell our listeners what role the sovereign data AI could actually play in this particular news?
Okay, George. In that context, TFSF's focus on clients keeping ownership of their code and IP aligns nicely with the idea of sovereign data, where they keep control over their intelligence. By building custom AI infrastructure for client-specific projects, they're supporting clients' ability to develop their own sovereign AI capabilities without relying on external platforms. That approach provides a strong foundation for data privacy and independence.
Well, it does make a lot of sense, and I totally agree to that. So thank you so much for your valuable insights, Satoshi. Really appreciate that. So look, guys, these are some macro level news on the Bitcoin blockchain, cryptocurrency, and artificial intelligence world from blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. Now let's do one thing, Satoshi. Let's go ahead and kickstart with the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. So let's go ahead and kickstart with the Ask Me Anything series, alright?
Sure, George. Let's go ahead and kickstart the Ask Me Anything series.
Hey everyone, it's Josh on Blockchain DXB. You're listening to the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. And we have a question from Giselle who asks, could close a US-UK cooperation on stablecoins and tokenization accelerate development of global digital asset standards? This, to be honest, Giselle, is such an important question, and the answer to that is yes. I do feel that a cooperation between two countries, be it let's say United States of America, UK, or any other country for that matter, will definitely improve cooperation on stablecoins as well as tokenization and digital assets, isn't it? But am I right in saying, Satoshi, now it is also important to understand we also have to follow MiCA regulations, and according to me, look, that will also play a pivotal role in the adoption of Bitcoin and cryptocurrencies, stablecoins and tokenization. And regarding the cooperation between the Treasury of the United States of America as well as UK, I do feel will be positive, not just between these two countries, but even for the broader ecosystem, isn't it?
That's absolutely right, George. Giselle, that's a fantastic point. When two major players like the US and UK align on regulations, it creates a clearer path for everyone else. It helps reduce confusion and encourages more people to get involved in digital assets, including stablecoins and tokenization, because there's more trust. And as you mentioned, things like MiCA in Europe are also setting standards. So cooperation across the board is definitely positive for the whole ecosystem.
But Satoshi, am I right in saying cooperation in the world of digital asset could also be a negative thing? Because look, because of strong cooperation between US and UK and probably other countries, it could also mean that now the government, they would be taking the role of a surveillance state, and this does go against the very ethos of why Bitcoin and cryptocurrencies were created as well as innate. Now look, I'm not saying that regulations are bad, but having too much of regulations as well as cooperation between two countries does go against the very ethos of why Bitcoin and cryptocurrencies were created, isn't it? Now this news at a macro level definitely sounds great, and a lot of tokenization firms, they will definitely have only the benefits of it, but you also need to remember that right now in United Kingdom, the current regime is definitely going against freedom of speech, isn't it? So keeping all of these things in mind, I do think there are negative elements to it as well, isn't it?
You're absolutely right to bring that up, George. It's a crucial point. While cooperation can lead to standard clarity, the risk of government overreach and potential surveillance is definitely there, which, as you said, goes against the decentralization and privacy goals of Bitcoin. There's a fine line between fostering adoption and compromising core principles. Balancing those concerns is key for the future of the industry.
Now, according to me, look, Giselle, whenever there's a centralized entity involved, in case of stablecoins, we are talking about stablecoin issuers. In case of tokenization, I'm talking about centralized entity issuing tokens. In those cases, having regulations and corporations is definitely great, but at the same time, it is important to remember why Bitcoin and cryptocurrencies are created. Bitcoin and cryptocurrencies are created precisely for these reasons, ensuring that no centralized entity, even governments, can take control of our money, isn't it? But regarding this news, there's definitely positive elements as well, because look, it does increase adoption, it does make the market much more safer as well, isn't it? So definitely an excellent question. And that's about all, guys, from the Ask Me Anything series on Blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating and share the word across. Remember, Monday to Thursday is your Blockchain DXB podcast. We look at the process, we look at the latest technological development. Then, guys, you look at 2 news from Dubai, UAE and the Middle East. We look at the latest technological development. Artificial intelligence is definitely a hot topic in the Middle East. And what you're listening to right now, guys, is the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. So thanks so much for listening, guys, and have a nice and bye-bye.